Hello again, everyone. In this technical analysis of the stock market video, I'm calling it about to change because that's what I think is about to happen in the stock market. We're going to take a look at the S&P 500 here on a daily and weekly basis. Look at the Elliott wave count on the SPX, and then check in on a couple of stocks that look like they've got some development. We'll take a look at Apple and Twitter. Twitter's got earnings coming out on Friday before the market opens. So this is going to be a very active week. We've had earnings start to come out. It started the week ago Friday with the banks, and then a few more earnings came out this last week. Netflix was in the news, and of course Netflix got killed early in the week. And this coming week, I think we have about 1,000 stocks reporting earnings. Vast majority, a huge chunk on Wednesday and Thursday. And it starts with Google tomorrow, Halliburton before the market opens. So let's dive in here. Now, I've got a little bit of an error on this daily chart on the SPX. And this is very annoying right now. It's a weekend. Hopefully that's what's going to happen. I've got duplicate days for the 20th. Sitting here on the chart, and so I've tried to get rid of it, and it's frustrating. So it's just something quirky going on with the data provider right now, but decided to go with it. So here's what we're at. I think we've got this second wave. This is my preferred count, the bearish view. I'm expecting the next move to be to the downside, intermediate wave 3 to the downside. This trading in here, this activity has been very, very weak. I mean, the market going up and then, having 1.5 stocks up for every one stock down, and that 1.3, 1.4, I mean, it's been extremely, extremely weak. Advances and declining issues have been lagging in this entire move in here also. Now, what have I got in here? 61.8%. That's where this wave 5 versus 3. Okay, that's where it's 61.8% of this wave 3. So that was a target. And it's interesting, I've had that on here for quite a while now. And that's 28.16. Where was the high on, so Friday, Thursday, Wednesday. The high on Wednesday was 2816.76. It's going to be really interesting to see if that holds. And the next little target I've got up here, this line, it's 28.25. That is where C equals A. Okay, that's where wave C. Actually, this is what I want. Wave C equals A as a part of this large flat configuration, Elliott wave configuration, and it's a flat, not a zigzag, because wave B came all the way down well into the 90% range of the length of A. Okay, so anyway, I don't want to go into a ton of details on it, but that's what's going on. And of course, this entire wave count is invalidated if we get above the prior high in January. So if it's invalidated, what would be the alternate count? The alternate count would be the fact that we had a triangle and we're moving up here in a new impulse wave of some kind. Now, really don't know for sure if it's turning out to be an impulse wave. That's my best estimate at this point based on what's happening. I think we had a wave 1, a flat wave 2, and if wave 3 were to materialize, if this were to keep pushing, get above this high, my target would be up here at 29.43 for wave 3. Now, wave 4 and wave 5, I've just put up here as placeholders right now. Those are not meant to be specific targets. This one is, if we keep pushing. So that's the best picture I've got right now on the alternate count. Now, let me go back to the preferred count, and let's take a look at the weekly chart. And wow, that's good. Let's get it in proportion. Okay, so here's the weekly chart. Here's what happened this week. Okay. Very, very tight. The market literally, SPX was almost flat. It was up 0.5 point for the week. That's it. So look at the trading range. When you look in that little window here, when I highlight, you see the words range down there. 27.52 is the distance between the high and the low for the week. That is the most. When you go over here, look at this range. This range was 29.74, about 30. This was the tightest trading range since the last week of December, okay? And then we had, it was the last 2 weeks of December actually, very, very tight in here. They had the big move into January. So right now, I've been expecting this to end, this move in here to end, and we're getting very, very close, and getting this kind of compression makes me think, well, something's going to change, and I think it's about to change. That's why I'm calling the video about to change. And with all the earnings coming up and things, and then every time you turn around, there's something going on with the trade wars. It's just, you just wonder, okay, when's the next shoe about to drop? All right, so that's the picture there. I do want to take a quick look at Apple and Twitter. Let me zoom down here, take a look at Apple, and let me blow out the daily chart. This is my preferred count on Apple. It looks to me like Apple is doing a large ending diagonal pattern in here for wave 5, intermediate wave 5. Let me zoom back out. So this is what we're looking at, intermediate wave 5, and then within this, it looks like a large ending diagonal pattern. Now, if this is the case here for this pattern, then watching to see, it hasn't broken down yet, but watching this really closely in here, because this has been hugging this trend line, and watching to see if we get, a close below a couple day move, a couple days trading range, 2 or 3 days, and this starts to break down and rolls over. So that's the picture on Apple. That's on my radar screen. And then the other one, Twitter's got earnings out this Friday. There we go. Here's Twitter. And this has really been interesting watching this, because I've been watching this expecting, this fifth intermediate wave. I've thought this was going to break out this last week, and it just hasn't. It's just sitting here. It just keeps pushing sideways. I still think that this is a fourth move because of the, we had the pullback here, sharp pullback. I was expecting a sideways move. I really thought it was going to go back in here, but then it just keeps getting more and more complex. I just don't think it's going to continue. We'll see what happens this week as we move into earnings, and earnings are on Friday before the market opens, as I mentioned. So that's the picture on Twitter, and we're watching to see what happens if we can get up here into this fifth wave and complete the third primary wave on Twitter. I do think after it gets up here, then it's going to correct a lot more significantly after that. All right, that's the picture for today, for the weekend. If you felt like the video was helpful, please hit the like button. And if you're not a subscriber, hit the subscribe button. And if you want to have more of this kind of detailed information, of course, I shared a lot more detailed information with my insider members, trade ideas, education, that type of thing. Check it out over here at joehenches.net. Click on my little face on the video on the screen there, and it'll take you over to the website. All right, everyone, have a wonderful weekend. Boy, is it hot here in the Southwest. I know Vegas and Phoenix and all of that, they deal with this on a regular basis, but man, it is like, what is it right now? 109 degrees in the Dallas area. So I'm ready we're supposed to have a cool wave, and a cool wave is going to take us below 100 next week for a couple of days. Everyone, have a great rest of the weekend.